Good morning. Welcome to today's panel. So, as I said, my name is Ron Finberg. I'm part of the executive director at Cappitech. Um, so, part of the event here, when we talk about regulation, so I have a number of questions I'm going to be asking our esteemed colleagues over here. Um, but these are my questions. I have my own curiosities when it comes to regulation and compliance. We are going to have at the end some Q&A. So if there is something that we don't cover or you feel like it's important for your business, you want to know about the topic, please go ahead and ask those questions. We really want to make sure that everybody has the opportunity to kind of cover what they're looking to know. So before we start, I'm going to start with Rav, and everybody can just introduce yourselves quickly.
Thanks, Ron. I'm Rav. I'm the founder and chair of the Retail Derivative Forum, which is a trade association for retail brokers offering spread bets and CFD products.
Hi, my name is Zaideen Bonabi. I'm the founder of Surveil. We leverage AI to automate compliance.
Hello, I'm Christiana. I'm the Chief Executive and Compliance Officer of Global Markets Group Limited. We are an FCA-regulated firm offering retail, professional, institutional services to onshore and certain offshore clients.
Hi, my name's Chris Rowe. I am the founder and director of Finext. We are a consultancy specializing in the FX and CFD space. We do technology, compliance, and also merger and acquisition work.
Good morning, everyone. My name is Matthew Smith. I'm the CEO of EC Markets. We are a retail broker. We're located in 7 different regulatory jurisdictions, including here in the UK with FCA regulation.
Thanks, everybody. And if you missed anybody's names, they've very conveniently sat in the same direction of the names of their mug shots over there, or headshots, what do you call. Okay, so when we were giving the topic, I found it was interesting that they put in here regulatory arbitration. It could be understood what exactly does that arbitration or are we talking about? So I want to start with you, Chris. When it comes to negative friction of a regulation, and I know you help a lot of firms kind of get set up. So is it even worth opening up on a broker, or if you do, should you do both onshore and offshore?
I think my general opinion on this is to start offshore. There seems to be 3 tiers of regulation. You tend to have the onshore regulations like the FCA, ASIC, CySEC. You've then got this sort of middle tier of really good offshore regulations, such as Seychelles, Mauritius. I think you've got some of those, haven't you, Matt? And then we've got sort of lesser ones, which I probably wouldn't recommend. There are significant differences between the different regulators and what they require, how they operate. So my general view is even if you're starting offshore, which is going to be a lot more cost effective, start with a decent offshore regulation that will give you credibility in the marketplace and actually is proper regulation. There are a few regulators who do it as a tick box exercise rather than actually being a proper regulator.
When you say credibility in the market, is that with clients or with counterparties in terms of
Both.
payments and
Both.
systems?
If you have a better regulation, then you're actually going to get much better terms with your LPs and people like that. But also, not all traders are discerning. Some of them will just go for the highest ever leverage. But actually, there are quite a few who want to know they're trading with a proper regulated counterparty, which is why it's so important. But having offshore and onshore, as Matt's already sort of covered, he's got 7 regulations. It's, the reason why you do it is people want to have FCA protection, but the reality is they don't want 25 to 1 leverage. So at that point, they go, actually, what else have you got? But what you don't want to be doing is pushing them to somewhere very unregulated.
Okay. Matt, since he's been brought up into this subject by Chris, from your point of view, having gone through the process of getting all these regulations, is it worth it? I mean, look, on hindsight, was it the way to go, or would you now, if you start today, would you do something different?
If you asking me personally,
it's built up right now. So
personally, that's a good question because sometimes it takes up a lot of my time. No, look, we do it for 2 reasons really. One is primarily for clients, right? Clients need the choice. As Chris touched on, some regions just don't provide the right leverage or the right product range that the clients need. But then also from the regulatory perspective, there's some things that we can't do with some countries that we can do with others, with different jurisdictions, different regulations. I guess the balancing act is making sure that you're not putting yourself out as one thing and then pushing clients to another. That's the major problem that the regulators have is are you using, I think the FCA call the halo effect for this. So that's not the reason we did it. We did it so that we can basically operate either locally somewhere or at least operate legally and from a regulatory tick perspective. But yeah, so to tick the client box and the regulation box.
Interesting. So, Christiana, I want to take your perspective because your firm is a bit unique, as GMG is only regulated in the UK. So with all these different trends of offshore, onshore, all the different places in the world, you're kind of going against that trend a bit. So I'm just as a UK only broker, how are you working with, still having clients from around the world and complying with the regulations of only being in the UK?
Yeah, so basically, FCA regulation, as Chris mentioned earlier, provides that trust that
Close.
consumer trust in the brand, which is very important, and also with partners, banks, counterparties. It gives you that extra sense of security. Now, we mainly address our services to the UK market, but also other offshore jurisdictions where clients opt for the stronger protection. It's all about trust and credibility. At the end of the day, if clients, if we can address our services, provide our services to offshore jurisdictions, which are, where we can solicit business, there is still scope. I would say that it also depends on the target market, whether you are addressing the pure retail market or institutional markets. In that sense, having the more strict regulation that adds again to trust and credibility. So it really depends on who your target market is, whether it's retail or more institutional, professional.
All right. So I didn't want to move to you. So Matt had mentioned something interesting about the halo effect of trying to get use your credibility as a UK market and try to get clients from around the world where you're not necessarily offering the same thing. So yeah, as a compliance firm using AI, how do you what's the best practices in ensuring that firms are actually not promoting one thing and then but putting their clients on something else?
Excellent question, and I would actually go back to something that Chris mentioned earlier. Is if we think about the world exactly like the way you described it, is onshore, offshore, and something else, and all these decisions have practical operational implications on the firm itself. Like, how do you manage your compliance program if you look at the world at 3 different lenses at all times? How do you ensure consistency in the way you operationalize these things? And I think that those are challenging questions that have like downstream impacts from an operational perspective. And I think that what we offer our clients and what our clients really want is operational seamlessness, where you're not bifurcating processes, because once you do that, you create human error. And then that creates cost on the operational side. Like, as an example, for FCA, we have to do X. For offshore, we have to do Y. And then for the something else, we have to do nothing. And so I think those are difficult operational issues that firms have to consider.
Okay. So Rav, I want to get your perspectives, because I didn't seem to be leaning towards having this, more different, having a top to bottom approach where you want to have more of a unified approach, and then having little sectors on how you're looking at the different, regulations that you're covering. What's your view on this? Should you have that central, monitoring of all your different regulator offices, or should it be more separated?
I mean, I think every firm takes different approaches based on their risk appetite, first of all. But I have seen a trend where you do go with the most regulated entity and you try and apply those regulations across to the other entities. We've seen regulators try to harmonize the rules that they have within their jurisdictions, but we are also now seeing a growing trend of interpretation. And interpretation, I think, is going to be more fascinating for 2026 when we start delving into what a specific thing means for one regulator versus another. So I wouldn't say that there's a common consensus just yet, but I think there will be a
Do you have a specific view you believe is best? Or?
I mean, personally, I think it would be operationally having one set of standards that you can then apply and then fall downwards, but then you've got to keep your competitiveness. And I think that's also an important factor that firms consider when making those decisions.
Matt, I want to get your perspective. Actually, doing the work across 7 different jurisdictions, how do you handle that?
Yeah, do you know what? To sort of step back a little bit, we'd love to apply the same rules and the same structures across all our entities that we apply to sort of what we would call like the gold standard licenses, which are our FCA and ASIC and FMA license. In practice, it's impossible. The UK, for example, on their financial reporting, you show me a MIF 001, 002, 003, looks nothing like you have to do for the Seychelles on a quarterly basis. The information that the UK cares about is about whether your firm is solvent. The information Seychelles cares about is how many complaints you've got, how many clients you've got, and where they're from. So the different regulators bend and shape you into what they need. You can't dictate it to them. I think what I would say is what we apply is the spirit of the FCA regulation, the kind of open honesty that they require. The standards of the executive directors that we appoint in jurisdictions always have to meet fit and proper tests, and treating customers fairly is just the overriding principle that ties everything together. But weirdly, a lot of the regulators don't require TCF. They don't even talk about it. They just ask us how you manage complaints, which is pretty much the same thing. So if you treat your customers fairly, your complaints go down, and therefore the regulator has less on their plate. But in spirit, we try and follow the gold standard. In practice, we comply with what's required.
Yeah.
Can I just add to that? So I think what's interesting is that the FCA require you, and I'm assuming ASIC is quite similar, require you to prove that you're doing all the right things. A lot of the offshore regulators don't require you to constantly prove that, but they will act if, as Matt says, if you get a complaint, which is quite different. So you have to do an awful lot more for an FCA or an ASIC license. But we are seeing a change that a lot of players are actually just going, I need one of those licenses rather than, all 3, because as Matt will probably tell you, they all require a lot of work. And
but just very quickly, that as a case in point, the UK license requires you to do daily money reconciliations for your clients. The offshore's monthly. Right? So you don't have to do quite sort of an extensive exercise in separating your money from client money on a daily basis. You don't have to classify your clients as retail or professional yet. That's changing in the Seychelles. You don't have to constantly maintain your capital in line with either your activity or your license or whatever different sort of own fund threshold requirement applies to your firm. It's just a fixed amount of money for offshores. So a lot of the finance and compliance energy that goes into the onshores is not required for offshore. And it would be silly to try and apply it to it, because you'd have to have a team of equal size to your UK for each of those, because there's a lot of work, especially when you're dealing with like multiple payment service providers rather than just bank transfer. So the offshores are changing. I sit on the Seychelles Capital Markets Committee. Next year, the capital requirement's going up to $200,000. The classification's coming in for retail and professional, which means leverage will come in at some point after that. So it's not a case of going, oh, offshore reduces my regulatory compliance. They are coming up to standard, and they will get there. So it's easier if you apply the same levels for your onshore as you do offshore now. Otherwise, you're in for a nasty surprise.
Sure. I want to, so on that idea of the professional and retail client and being able to take advantage of the leverage if you're professional, how do you go about that? Because I'm sure a lot of clients want to be deemed a professional, but they're actually retail. So what's
Yes, that's a very interesting and popular question these days, especially with the FCA. There's been a lot of thematic reviews and there's been publications by the FCA in terms of investigating with firms how they reclassify clients, if they push them towards that direction, if they follow strictly the criteria, they document and they satisfy themselves that the client is truly experienced and can be classified as elective professional. The truth is, if you apply the requirements and the rules properly to protect clients at the end of the day, then you've done your job properly, whether you are onshore or offshore. There have been firms that have been pushing clients that they cannot reclassify as elective professionals offshore, and the FCA's and ESMA, also the European regulators, are really scrutinizing and penalizing firms that are doing that. So the question is, do we, at the end of the day, if we do our job properly, we act in the best interest of clients, we should be reclassifying them or maintaining them as as they should be. I would say that if your target market is more experienced, more sophisticated traders, then you're in the right place, and clients will come to you whether they are UK based or offshore, and they will be properly reclassified, as elected professionals. But for the rest, we have to do what we need to do to protect them.
Okay, so just to summarize that, from a compliance perspective, the best practice is really let them come to you and not really be pushing them in a certain direction of how you're going to classify. Okay, Rav, I want to bring you into this discussion. We've talked a little bit about it in the past about AI and how that's coming into this market and how it could be possibly used for assisting in compliance and regulation. What are your views on that, and what you're seeing on the ground now that it's actually being effective?
Sure. I think it's super exciting. I often say the impossible is now possible. I think the reg space, certainly next year, you'll see a lot more products, including AI in a lot of items. We've seen the rise of generative AI with ChatGPT. I expect next year you'll see more agentic flows. When it comes to breaks, for example, I believe that there will be automation and robots that effectively resolve the issues that you have, and you can operate with a more leaner model. I think from a knowledge-based perspective, of course, you have to be careful with hallucinations, but I think there's a lot of benefit to gain. I personally use it a lot. The Retail Derivative Forum effectively have about 8 different agents working in the background, and from creating documents to slides to emailing regulators, everything, majority of it starts off with AI, but we always have a human in the loop. So I do believe it's going to be very exciting for 2026.
I think Rav and I are going to be best friends. Everything you mentioned, Surveil does. We are one of the first adopters of the agentic model, meaning that for every task that we do, there's at least 10 AI agents working collectively to reduce hallucinations. In fact, that is the main purpose. So we've built in guardrails in every step of the flow. What we've also noticed, however, is that one model, like out of the box solutions, do not work for clients. Every firm is unique. Every process is unique. Every person in that firm is unique. And what we're realizing today when we speak to clients is that the analogy we can think of is, imagine you have the model employee, the model compliance officer. This is your best employee. Well, how did that person become the best compliance officer? You nurtured that person and you gave that person feedback. The agentic model is going to be very much similar, that if you want to realize these efficiencies, you have to make a commitment to AI. And then I think that inevitable truth is that that's the future.
So in that regard, what does a firm need? Is it just a matter of a software play, or is it having specialized employees that's their job is to be, managing these the agents that you're creating?
I think from our perspective, it is first focus on the pain point of the client itself. That is to say, a broker has an issue, as an example, with reporting. Then you break down reporting, the different paths that need to be addressed. And the way our agents work is they overlaid on the existing processes. So it's not a per se software play where you now have an additional software you need to log into, but instead agents that really operate like employees. They're on top of your existing infrastructure.
I mean, just to add, I think there's an element of education. First and foremost, I think a lot of firms have all these great AI tools rolled out on their systems, but nobody knows how to use it. And one of the first things that I would always encourage firms to do is make sure you train your employees. There's a lot of fear that AI will come in, take their jobs, etc., etc. But Microsoft's called their tool Copilot. I think it's the perfect name. It's a co-pilot. And education is one key thing I would stress.
Chris, what did you want to add on this?
Yeah, we're seeing an increase. I'm doing quite a lot of compliance software as part of the technology part of our business, and we're seeing an increase of AI used to analyze documentation. There's a very interesting product out there that monitors what your ARs and IBs are saying, which is something that's a real problem, because you get regulators going, well, hang on, so-and-so said this on your behalf, and how do you know what they're saying and printing out there? So there is technology using AI to analyze all that data. So they're monitoring all the activity out there, wherever the broker's name is being used, and then can report back to a compliance team who can then go, actually, we're not comfortable with that. Let's have a chat with the AR, and preferably before the regulator comes and knocks on your door going, oh, we've had a complaint about this. So, it is increasing. I think the thing with AI is to use it carefully. I think it's one of those phrases that's coming out and everybody's going, oh, use AI for everything. But actually, as you mentioned with the co-pilot, it needs to be directed where it helps you to achieve something, rather than people going, how do I use AI to completely transform my business? I think you need to be very much more specific.
Okay. I want to go back to that idea of going over the IBs. But before I do that, during this event, how many of you have had conversations about stable coins or been approached by people with stable coins? Share of hands. No one? I've had like 5 times, so like I can raise it a bunch of times. So I've heard a lot about stable coins and as a way to do payments for the retail market and also institutional. So I'm curious about how that works for regulated brokers and offshore in terms of accepting cryptos and accepting stable coins. Is that something applicable to everybody, or is it only for specific regulations and formats? So, Cristiano, I'll start with you on this. As a UK broker, is it something that you're able to to take advantage?
Yeah, I want to mention a new development. Actually, in terms of stable coins, there's going to be new regulation coming into play next year in terms of qualifying stable coins, and the FCA, together with the PRA, are working towards that direction to regulate the environment, which means that there's going to be increased consumer protection. Qualifying stable coins will be part of mainstream everyday payments operations. So there's a lot of, the UK is, going forward, is aiming to become a more, a hub for crypto operations. And once the environment is more regulated, there's going to be increased protection, and that will be beneficial both to the retail and the commercial sector. Now, in terms of whether UK regulated brokers are able to incorporate crypto payments, that's a tricky question. If you only have UK regulation, a lot of the banks and counterparties are very skeptical, and the regulators are skeptical. You know, in terms of accepting or holding, safeguarding cryptos. So going forward, it will be a matter of whether you use qualifying or regulated stablecoins, which will be part of our life. Non-qualifying ones will still be higher risk and will be probably out of reach for a UK regulated broker. Now, going offshore, the regulation is less, it's more
maybe
flexible.
I'll maybe for the offshore side and just in
Yeah.
general,
Okay.
I'll ask Chris about that. When firms are looking to open up, does crypto payments come up? And if you have,
Oh, absolutely. Yes. So crypto payments is quite important. There's certain countries where it's not easy to get money out of the countries. Some quite significant ones like India. So they're using stablecoin is quite important. I would pick up on your point there. There's a massive difference between, we use crypto as a blanket statement. I think we sort of need to differentiate between the stable coins, people paying in USDT, etc., compared to playing in BTC or some of the other less well-known cryptos. I think probably most brokers would be quite happy to take a USDT payment, but probably not one of the less well-known crypto payments, or at least you would convert it back into fiat as quickly as possible.
I mean, I can answer partially for you if you like. We don't accept any form of crypto payment directly from clients across any of our regulated entities.
do or do not?
We don't. We don't. The UK is well described there. It's not even a grey area. It's almost impossible area. And you need a license to deal with any kind of crypto in this country. If you take Mauritius, for example, you must have a VASP, a virtual asset service provider license, to be able to take crypto. We don't have that license. We operate in Mauritius, therefore we don't take crypto. The difficulty is really, how can you prove to anybody that the source of the deposit is the person that you've KYC'd AML, right? It's really hard to do. And therefore, that's why you have these separate licensed firms that identify clients. They know how to do it. They hold the money in custody. And generally speaking, you have to partner with one of them to provide this service. We are in the process of getting a number of VASPs for our different, because you can get them in lots of different countries for our different entities. But for now, we don't use as a direct payment. However, our payment service providers can't settle certain currencies with us directly. We're a normal firm. We have 3 major currencies: sterling, dollars, euros. If we need to get the client money in those currencies, they can't deposit in them. So a PSP may convert the deposit into a USDT token, which we then can hold and convert ourselves. So it kind of oils the wheels.
I was going to add to that most companies don't take the crypto in directly. They will always do it through a third party who is regulated and...
Yeah, but we're not holding ourselves out of, like, the client doesn't think that they're depositing crypto. They see it as they're depositing fiat. They don't know how the payment service provider and the broker then interact. The important thing is when they withdraw, it's back out in fiat and everyone can see the bank transfer data. That's key.
The third party that you're using in the middle that is regulated, what do they need to, what type of regulation is recognized to be able to use for a UK firm or ESMA regulated broker?
I mean, probably the most active regulator in that space is Lithuania. So certainly the Baltic states seem to have grabbed crypto quicker than anybody else.
That's recognized for, like, the FCA if you're using a payment provider.
Well, that's an interesting one with FCA. I'm not sure I would encourage
but the rest of ESMA...
I think the biggest problem is actually if you've got a Barclays or an HSBC account, if you take a payment from them, they're going to be all over you like a rash, which is probably what Matt's about to...
No, I'm about to clarify my comment. The methodology that I described is not used for our FCA, ASIC, FMA.
Okay. I want to end with one last question, and Aiden, I'll go to this. Along with other items that were new to me, walking the halls yesterday, was about influencer marketing as a new way to get clients So, and they can, especially in the crypto space, they could say whatever they want. How, in terms of like market communications, how do you do surveillance of your third parties like that if it's a
Yeah,
different type of market?
that's a tough question. Regulators now essentially demand supervision of the influencers. That means that the words that they're saying, the videos that they're posting, you essentially are liable for. And the question then becomes as asked, is how do you supervise that at scale? And I think that is a very difficult challenge that firms have if they want to leverage influencers. And I think that there is automated solutions now that are able to do that. And then again, we are thinking that our position is language is contextual, and you have to have contextual understanding. So again, AI will be a good solution to that problem.
Okay, thanks. We'll open it up for questions from the audience. Yes, 1 second. They're going to bring you a microphone. One moment.
I can touch on for you in regards to influencers. I don't know if you've noticed, but a lot of them have like little statements at the bottom saying it's not like financial advice. I think that's something that you could obviously look over. Anyways, my question is, does anybody have a definitive answer on how the taxation works in this industry? Because obviously it's really hard for me to explain to investors when it comes down to this. And nobody's got a black and white answer for me.
Don't think you're going to get one from the panel either. There is no, but it depends. I mean, it depends where your companies are located. It's complete. If I've got 7 different companies, they've all got different tax jurisdictions. So I don't really have an answer. And that's probably why most brokers can't give you one. You'd have to be more specific. And even then, I'd have to ask HMRC in the UK for a final answer. Well, if you were, for example, saying what's the tax regime in the Seychelles for our industry, I could tell you.
Yeah. Okay. What about in the UK?
Well, the UK, we're just standard corporation tax.
Standard corporation tax.
Yes.
Yeah. Okay. Okay. Thank you.
Okay, do we have time for another question? One? Okay. Any other questions? Okay. All right. So I want to thank everybody for coming to today's panel and from panelists, and for Finance Magnates' youngest audience member. Thank you very much.
Thank you.